All right, welcome back everybody to Altcoin Daily. My name's Austin. There is so much happening right now in the crypto market, and in today's video, I want to keep you informed. Like always, check the timestamps down below, find the news that's best for you, and let's jump in, starting with Bitcoin. Bitcoin miners sold their entire May harvest, we now know, meaning that they are finding it extremely hard to continue their operations as the cost of production has exceeded the profit. So miners are selling. Let's talk about why. New data from Arcane Research shows that public Bitcoin mining firms sold 100% of their BTC production back in May, compared to the usual just 20 to 40%. And if you're asking why, it's because hash rate, the amount of energy it takes to mine a block, has almost never been higher, while price is back to what we were at the end of 2017, beginning of 18. So small miners are being pushed out, forced to consolidate, forced to sell. Looking at BTC sold from public miners in this year 2022, in the first 4 months of 2022, public BTC mining firms sold around 30% of their mined production, which has then increased 3x folds in May and is expected to rise even further in June. And keep in mind, this does not represent all miners, just the ones that are quote-unquote public, release information publicly. And while public BTC miners only make up around 20% of the total network hash rate, their behavior often reflects the sentiment of private miners as well. So give me your thoughts on this down below. Keep in mind, miners are selling not because they're not bullish, but because they have to, because it's a business for them and they're trying to, the small ones at least, stay in operation. Also, keep in mind that Bitcoin network difficulty is self-adjusting, so if more miners keep dropping off, the hash rate will go lower, making it more profitable, encouraging miners to jump back on. This is a self-adjusting metric based on the environment. And next up, what does this miner capitulation mean to you and me? Excellent chart from analyst Willy Woo. Hash ribbons visualize miner collapse. So bottoms normally coincide with miners capitulating. Weak miners are bankrupted, adding to sell pressure in a cascade. And then ribbons then recover, green circles equal bottoms. Looks like we're deleveraging right now, similar to the pandemic event, red circles. So this is the chart showing Bitcoin hash ribbon. And with these ribbons, as they come apart, it either shows miners becoming more profitable, more on the network, or as these bands close back together, miners capitulating. It's no longer profitable for the small ones. Where we are now, much like the pandemic crash of 2020, those ribbons are getting super close together, showing capitulation. Now, because it's self-adjusting, they'll always expand eventually, and when that happens, that often shows a recovery process in the market. Okay, so then what exactly is Willy saying? And we'll just have to like the video real quick. Is Willy saying that this is close to around the bottom? And the answer is no. If we're expecting a normal BTC macro bottom, we haven't seen this come to pass yet. The typical signs of a bottom are not yet in, though there are no guarantees we'll get them because both BTC and macro markets are structurally very different than prior history. So give me your take on this. For me, I think what we'll probably see is whenever the miners are quote-unquote done capitulating, we'll probably see a bounce in the market for Bitcoin, but that no way means that we're back in bull market. We'll see. And next up, what is happening with altcoins? Well, Voyager Digital's token plummets 60% after revealing a $661 million exposure to Three Arrows Capital. Voyager Digital today announced it may issue a notice of default to the struggling crypto investment firm 3AC if it fails to make a loan repayment. So 3AC took out a loan from Voyager, and 3AC has been silent, i.e. not paying it back. Shares in the New York-based crypto platform Voyager plunged more than 60% after it revealed that its exposure to 3AC comprised of over 15,000 Bitcoin, as well as $350 million in USDC. Damn. So 3AC is in a lot of trouble. They can't pay back their debts as of now. And that means, by cause and effect, Voyager is in some deep trouble as well, because they're probably not getting that back. They've issued several notices to 3AC, heard nothing. And they also added, Voyager added, that it intends to pursue recovery from 3AC and is currently in discussions with their advisors regarding the legal remedies available. So they may sue, although if 3AC is insolvent, that will ultimately lead nowhere. Now, what does this mean to you if you had money in Voyager, if you hold the token? Well, actually, last week, Voyager did secure a revolving line of credit from Alameda Research, including a cash/stablecoin credit with an aggregated principal amount of over $200 million and a revolving credit facility for 15,000 Bitcoin. So I would guess, although nobody knows the future, that because Alameda Research bailed them out, which is Sam Bankman-Fried's fund, I would guess they'd probably be fine, but very nice of Sam Bankman-Fried to bail them out. Next up, speaking of bailouts, as of yesterday, crypto platform BlockFi secures a $250 million credit from FTX amid the bear market. So again, FTX, heavily backed by Sam Bankman-Fried, and he's coming to the rescue of these crypto companies who may or may not have been totally prepared for the bear market. In a direct tweet from BlockFi founder, today, BlockFi signed a term sheet with FTX to secure a $250 million revolving credit facility, providing us with access to capital that further bolsters our balance sheet and platform strength. He goes on to say on how these funds will be used. The proceeds of the credit facility are intended to be contractually subordinate to all client balances across all account types, BIA, BPY, and loan collateral, and will be used as needed. So basically saying it'll be used towards the clients. And he finishes by saying, this agreement also unlocks further collaboration and innovation between BlockFi and FTX as we work to accelerate prosperity worldwide through crypto financial services. This is a significant step forward in our commitment to the strength and accessibility of crypto markets. Give me your thoughts on this. In a way, I think this is very positive that they were proactive in getting these funds as opposed to somebody like Celsius, who you wish was more proactive in getting this funding before they halted all withdrawals on their platform. Anyway, bear market clearly in full effect. Let's keep moving. And next piece of positive news coming right out of a conference in New York called NFT NYC, Doodles NFTs announced Pharrell as Chief Brand Officer, as well as a fundraise led by Alexis Ohanian, who is one of the co-founders of Reddit. So huge green flag for the Doodles collection. And again, this is Pharrell Williams, now Chief Brand Officer. Williams, who recently entered the NFT space with his own gallery of digital assets, project. In his new role as Chief Brand Officer, Williams will help shape the collection's approach to music, artwork, consumer products, animation, and events. Basically help the brand. In a direct quote on a pre-taped video message at the event, he said, "I'm a big fan of the brand. We're going to build from the core community outwards and bring Doodles to new heights, new levels." So this is great news for Ethereum, of course, where this NFT collection is on. And additionally, Pharrell will also serve as executive producer on an album of Doodle-inspired music called Doodle Records Volume 1, which will be released in partnership with Columbia Records. Okay, very cool. I wish I held a Doodle. I don't. The floor price is super high. And by the way, at the event, the creators also announced Doodles 2, a new NFT collection that will span millions of avatars, up from just the 10,000-piece collection of the original collection, and feature a wider array of traits along with wearable items. The avatars will not be released on Ethereum, although no blockchain has been specified. Interesting. So while the first collection had 10,000 individual pieces, Doodles 2 will have over 1 million, potentially. Obviously, they won't be the same, but in my mind, this is like how the Bored Ape Yacht Club then got Mutant Apes. Basically in the same family, although not the same, and they had a cheaper floor, and there was more of them, as a way for average people to feel in the family. Next up, what about the Solana whale that we've been covering on this channel since 2 days ago? Heavy Solana manipulation. Again, seek out that video if you want the full story. But the news today is the Solana whale moves $25 million of USDC debt from Solend to now Mango markets. The move reduces the utilization of USDC within the Solend platform and allows users to withdraw their assets once more. So some of the liquidation pressure is alleviated. In a tweet, Solend shared that the whale has acted on the team's suggestion to move its position across various lending protocols. The act reduces the utilization of USDC within Solend, allowing its users to withdraw their assets once more. While the move seems like a band-aid solution to a bigger liquidation problem, the Solend team highlighted that they are working with the whale and the Mango team to create a more long-term solution to the underlying problem. So now that they see they have one, they're trying to be a little proactive to make sure it doesn't happen again. And apart from this, the lending protocol has passed another governance vote that will significantly lower the account borrow limit that's currently at $120 million to now just $50 million limit. Damn, so one guy ruined it for everybody, but at least they're being a little proactive. All right, that is the video. My name's Austin. Like always, see you tomorrow. Appreciate you.